You want to make money while you sleep? Okay, be honest. Are you still kind of confused about what that even means? It's okay. It's okay. Today, we're going to talk about what that really means. But before we get into that, let's talk about the week that was. The market gave us a mixed bag this week, with healthcare, oil and gas, financials, and big tech serving as the largest laggards. We saw a little weakness begin to appear in the dollar, and we got some good economic data with the initial jobless claims coming in below expectations. There was an uptick in the volatility index towards the end of the week, which may be something to keep an eye on as we continue to get closer to the presidential election. But none of that stopped the market from making new all-time highs. Three of the top five biggest movers this year have all been energy companies. Vista Corp, Constellation Energy, and GE Vernova have all doubled in value this year, with Vista Corp growing another 10% this week alone. A lot of the interest in energy stocks comes as a play on the semiconductor space. Did you miss the big run on Nvidia? Well, that's okay. Nvidia and other semi companies are using more energy than ever from local power plants, and some companies are going so far as to build their own power generators. So if you still believe semis are the wave of the future, then plug into their power sources and let it charge up your portfolio. XLU, the ETF that tracks utility companies, is up 30% this year and pays a 3% annual dividend. So with the XLU, there was a chance for outsized returns above what the market produced in the same time frame, plus a little extra pocket change every 3 months at a rate almost equal to the 2-year bond. Speaking of the 2-year bond, let's talk about what to do with your money after you start raking it in hand over fist. Here's how you can make money while you sleep. First, pay off your debt. And there's a lot of different ways to do this. But if your interest rate on your debt is higher than the interest rate you're making on your money, then you're losing money paying your debt one payment at a time. Remember, those who understand interest make it, and those who don't pay it. Second, open a high yield savings account. Look at the interest rate on your checking and savings account right now. It's less than 1%. I already know. Your bank is keeping all your money, and they're not giving you anything in return. That's lame. Don't let them do that to you. High yield savings accounts won't make you a millionaire overnight, but the average yield on one is 4.5%, and a lot of accounts are still yielding well over 5%. But is that still not enough for you? Then check out bonds. A bond is a loan that you give someone else, and there are three main types of bonds: treasury bonds that are backed by the Federal Reserve, municipal bonds that are backed by local cities and counties, and corporate bonds, or loans that you give to businesses. That's right, you can loan money to Apple, Nike, Starbucks, or any other company. And just like people, companies have credit ratings too. Corporate ratings range from AAA to D, and the better a company is rated, the lower their interest payment is going to be on a loan. You may be fishing at the bottom of the credit rating barrel when you're looking for a yield that's greater than 5%. But one thing to keep in mind, when a company files for bankruptcy, they have to pay back loans first. They pay back shareholders last, if the shareholders get paid at all. So that's two plays on how to make interest. One, pay off your high interest debt. Yes, you didn't make money doing that, but you won't be hemorrhaging more cash either. Then, find someone to pay you on the money you have sitting in your accounts, whether it be high interest from your current bank or a loan to the government. You'll never go broke as long as someone owes you money. And because all good things come in threes, these two shits don't count. Here's your third play. Buy into an index fund. An index fund or an ETF is a collection of stocks designed to track the stock market. On average, the stock market returns about 9% a year. And no, I'm not saying buy an individual stock and it'll go up 9% every year. I still love you, Disney. I'm saying buy an index or an ETF matching index and invest in the stock market as a whole. Every fund manager, every investment firm, every bank is trying to beat the rate of return given by the S&P 500 in any given year. So would you rather bet on the house or bet on the gambler? Here's a 20-year chart of the S&P 500. Can you point out the '08 recession? What if I showed you a 10-year chart? Can you point out March 2020 when the market dropped 30% at the beginning of COVID? What if I told you that even after falling 30% at the beginning of that year, the stock market still returned 18% by the end of 2020? So how do you get in? Start with the Vanguard 500 Index Fund ETF, ticker symbol VOO. You can also invest in SPY, the OG of ETFs. State Street SPY was the first index matching ETF introduced to the stock market, and to this day continues to be the most popular. So that's how you make money in your sleep. It won't come all at once. The interest in your first year will barely be enough to pay for lunch. In year two, it may be enough money to pay for a nice dinner. But by year five, as long as you continue to let it compound, your interest will change your life.